Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. Now, it's Thursday, the 20th of April, and we have our regular Thursday guest, David Kuo, founder of the Smart Investor Singapore. David, as always, great to have you on the show.
Selamat tengah hari, Brian. Down day Thursday. I can almost guarantee. I can feel it. Down day Thursday.
Well, David, before we come back and get your sagely advice, let's actually go and take a look at all the numbers across the region and how they stack up. We will, however, start with cryptocurrencies. Bitcoin is at 28,909. It's down 4.29%. Ethereum is at 1,953. It's down 6.59%. Now, looking across the regional equity markets ahead of the long weekend in some markets, we've got the SGX, which is down 0.24%. The KLCI out in Malaysia is down 0.35%. Shanghai is down 0.71%. The ASX Ordinaries is up 0.07%. The Nikkei is up 0.25%. The Hang Seng is up 0.14%. And rounding up the numbers, we've got the Kospi, which is down 0.54%. Now, it's a pretty mixed bag, David. Tell us why.
I would say there are more downs than ups, Brian. So I think I win on that one. It is down day Thursday. I think people are worried again about the Federal Reserve and what they're going to do. It's almost as though they're not paying attention to what is happening. I mean, the latest beige book came out from the US, which suggested that there is an 80% chance that America may go into recession. And when I saw that, I went, really? Okay, so why are people surprised that America may go into recession? That is precisely what the Federal Reserve wants to do. It wants to crack the economy because that is the only way they're going to get inflation under control. That is the only way they're going to get wage inflation under control. So I'm not entirely surprised. But at the same time, Brian, even though we talk about America not doing particularly well last night, there were some companies that reported earnings. One of them was a company that is one of my favorites, Abbott. And Abbott makes nutritional drinks that also makes medical devices. And a lot of people were saying, oh, the other thing that it made were, of course, COVID testing equipment. And people were saying now that COVID has gone, Abbott is going to come up with disappointing results. They were far from disappointing. I mean, this is a dividend aristocrat, Brian. And it produced.
I like that term, dividend aristocrat. Okay.
I know, and it has been able to raise its dividends, and it's been around for over 100 years, and it is one of my favorite companies. And sure enough, when they came up with first quarter results, it blew the numbers out the water, right? And it said, well, COVID, okay, so we've got other parts to our business, and they're all doing very well at the moment. Thank you very much. And the shares popped 8%. So I think people who are worried about what is going on in the market need to spend more time analyzing companies rather than analyzing the market. And of course, it is true that companies make up the market, but the companies are by themselves, unique entities, and you're investing in companies, not investing in the market. So that's my take on the US market and the Asian markets.
Now, so talking about markets and stocks in particular, a market darling is Tesla, but they announced disappointing earnings. Their earnings were down 20%. What are your thoughts on that, David?
Well, they cut price. What do you expect when you cut price? If you cut prices, you have to be able to make up with it with volume. And so anybody who has been in business knows that if they cut the price of their goods, whether you're talking about a mee pok seller here in Singapore or somebody that operates a nasi kandar over in Malaysia, if you cut your prices, you expect to make up for that price cut with volume. And if you can't make up that volume increase, then you're going to end up having lower profits. And that is precisely what has happened, I think, in the case of Tesla. We mustn't forget that there are alternatives now. There are alternative car makers, electric vehicle makers. But I think in the case of Tesla, it believes that it is a price leader and it can dictate prices. But it can only do that so far, Brian, because other companies are coming up now. the likes of Volkswagen, the likes of Mercedes, they're all making electric cars. So
And
maybe
now the market leader, David, is no longer Tesla, it's BYD from China, a Warren
well,
Buffett company.
absolutely, yeah. I mean, companies like Xpeng, Neo, I mean, all of these companies, are there, and they are going to be snapping at the heels of Tesla. So I guess what Tesla wants to do is to cement its market share and say, we are the market leader. I don't think they're going to be the price leader in future, because when people have a choice, when people say, do I want to choose a Tesla or do I want to choose, say, a Volkswagen, or maybe, I don't know, a Porsche electric vehicle? It's going to be tough, I think, in the case of Tesla, but it thinks that by commanding a bigger share of the market, it can have a bigger say in what it's going to do. But it needs to watch its back, because there are other vehicle makers out there and companies that are very, very practiced in terms of car production. And in that sense, I would say that Tesla is relatively new in car production. It might be very innovative, but it's relatively new in car production. And I think it should really go down the Apple or maybe the Dyson route and say, we're going to produce fewer cars, but better cars, rather than to go for the mass market.
Now, David, I want to move closer to home and talk about the Thai elections. Give us a sense of how investors are looking at that, and what are the potential impacts for the region.
Well, this is a really difficult one, Brian, because we mustn't forget that Thailand is the second largest economy here in Southeast Asia. And so it will have an impact. And it's got a general election coming up in May. And ahead of that election, people are notably, I wouldn't say concerned, but I think they are mindful of the fact that things don't always go that smoothly in Thailand. And if things don't go well for the current government, who's to say that they might not cancel the elections next month? So we need to be very careful about what is going on. And it would be great if things went smoothly and we had an election that was open and fair, and the people's choice becomes the next government. I think that would be good. But until then, I think there'll be a lot of people sitting on their hands, particularly in the region. We know how close Malaysia is to Thailand in terms of geography. And when I have a look at the Malaysian market over the last few days, it has come off the boil slightly. And I would think other markets in the region might do the same. But once the election is over, I think people will go back into the regional markets. And I think it'll be business as normal, Brian.
The thing with Thailand, and I've got to get your insight as an investor, is the following. Despite relative instability in Thailand over the years, Thailand seems to work. Thailand people still open plants in Thailand. Investors seem to factor that into their plans, whereas they're less forgiving of other markets, Malaysia in particular being one of them, where investors are less forgiving. David, any thoughts as to why that is the case?
Well, I think it's because of legacy, because I do remember doing some numbers once on the number of military coups over in Thailand. And they'll allow a government to rule in Thailand up to a point, and then suddenly the generals say, oh, this isn't good enough, we're having a military coup. And I think they have one every few years. So
Yes.
The military then comes in, and sometimes you can almost set your clock by it. If a few years go past and there isn't a military coup, you go, another one is due fairly soon. So when the military coup comes along, people go, oh, it's business as usual again. So the military takes over, and then they'll say, we'll just stay in power for a little while before we have general elections again. And it's just one of those things. It's just a fact of life. I think if it happened anywhere else in the world, we would be concerned. But because it happens in Thailand, it's just normal. It's just considered to be fairly average. And I don't think I don't think businesses or even the news channels are really that concerned whenever there is a military coup in Thailand. Let's hope it doesn't happen this time, and that a populist government will be able to run Thailand for long enough so that investors can have some stability. As far as businesses are concerned, they don't care really who is in charge, as long as they can carry on making their goods, selling their goods, exporting their goods. And that is really what drives Thailand over the long term.
Now, David, as always, thank you very much for your insights. Thanks for coming on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. I'm Brian Fernandez, and you've been watching and listening to this conversation on Biztech Asia. This show will also be syndicated on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.